Hi guys, welcome back to a new video on this YouTube channel. If you're thinking of registering a company in Delaware because someone told you to do so online because it's tax-free, please stop right there. And if you don't know me already, I'm Will Hodgson. I'm the managing partner at HPT Group, formerly known as 4 Point Solutions, where we design multi-jurisdictional company structures, private wealth strategies. We help with residents. We help with CBI programs, obtaining second passports, as well as other topics as well in regards to the fintech space, where we're actually serving clients in over 25 different countries now. So before you waste your time, you can essentially book a free call down below, check out our website. And if you haven't gone and subscribed to my YouTube channel, please go ahead and do so. And always feel free to leave some comments if you do have any questions in remarks to any of the topics I've even spoken about. So now let's actually talk about why Delaware might be one of the worst jurisdictions that you can actually choose, right? So Delaware became famous in the US because venture capital firms prefer it, right? It's where Apple, Google, Tesla's incorporate, and it matters not because it's actually it's offshore or tax-free. They use Delaware because it has a very specialized business court. That is the Court of Chancery, and it's very easy for investors to hold shares in these courts and in this particular legal background of actual Delaware. But for non-US founders, the advantages typically disappear, okay? So you don't get the tax benefits, you don't get privacy, you just inherit the US tax reporting obligations, visibility within US markets, and a massive compliance headache. So essentially, number one, you already automatically owe the IRS, okay? So every foreign-owned Delaware company must file the 5472 and the 1120, even with zero income. And if you miss that filing, you're looking at $25,000 plus a year, and you'll also pay Delaware's annual franchise tax and registered agent fee. So you're now inside the US tax system, permanently visible to the IRS and global authorities under the FATSA reporting requirements. Again, additionally, you also lose your banking. You know, I've spoken a lot about banking. I love the aspect of international banking around the world. You know, living in one country, having your bank account in another, your passport in another, and another holding company in another, being diversified across the actual world, right, to protect you from many different aspects of day-to-day life. And non-residents can't easily open US accounts anymore. They have to use fintechs like Mercury or Relay, and they only actually work for limited industries. They're not really suited for high-risk verticals. And again, they can freeze accounts the moment you actually do something that's not within small written text that no one ever reads. Again, every US entity is automatically subject to the FATSA data exchange. So instead of flexibility, you get red flags, block transfers, compliance delays every time you move money. If you don't already know me, I've never been pro the US and I will never even be pro the US unless they significantly change, which I cannot see that going ahead. So again, you also damage your international credibility. Delaware isn't offshore, it's American, you know? When a payment from your company lands in Europe, Asia, Dubai, banks instantly flag it as its US origin. If you don't know the back end of compliance strategies or even having a US beneficiary on a trust, it's a complete headache, even with US sourced income. You know, you've got filings for days that you don't need to be doing if your company obviously wasn't there, right? So global clients even refuse to pay US companies due to the tax complications over there. So what we actually do is we can create better structures for, you know, global entrepreneurs, global actual founders, you know, and that's what we actually do here at the HPT Group. We're building compliant, efficient, effective, multi-jurisdictional setups that actually work globally, right? Typically, rather than Delaware, I'd actually look at like a UK LTD, right? So it's great for digital entrepreneurs and consultants, full banking access, and again, the profits can be routed through parent companies for efficiency with a few agreements here and there. There's not a lot you can do. It's getting a lot worse in the UK, as I've mentioned on other videos. But again, I still prefer it to a US LLC. We can look at Ajman, Dubai, RAC, DMCC, UAE free zones as a global HQ. Again, you potentially can have 0% tax on international income, excellent reputation on global banking access, and it's perfect for founders wanting substance and residency as well. Potentially, if you want to go down the privacy and protection routes, for example, our service company is based in the Seychelles. You could also look at NEVIS as well, public registry of directors or shareholders, excellent for holding IP, offshore profits or trusts, and it's got, again, a high resistance to external court judgments. Now, if you wanted something in the EU market access, you can look at Cyprus or Ireland. Again, 12.5% with full EU substance recognition, and it can serve as a bridge between offshore holdings and European clients. For North American actual access, I also have one myself for Salt Lake Capital. If you've gotten to see my LinkedIn, I also have another business over there, and that is actually located in British Columbia in Canada. And again, it's recognized globally, and there's no US reporting exposure. Very key here. We're going back to the actual filings and the headaches that can come from those US reportings, X, Y, Z. And again, it's very easy to actually incorporate with SaaS or digital agencies that operate globally, right? So again, we don't just form companies here, we build the ecosystem around you. Every case that we get given when you come to our company, our clients are vastly different in every different angle, and a client structure typically looks like a Cook Island Trust because they're so fantastic. NEVIS Holding, UAE HQ, and then maybe a Cyprus or an island actual operational company. And again, you would be achieving three things: full banking and payment access, whether it's PSBs, EMIs, traditional banks, legal protection from litigation and tax claims, and again, scalability for investments, crypto, and exit planning as well. So everything we do is compliant, fully reportable, and is built to withstand the international scrutiny that's going on in the world actual right now. We are not a formations agency. We are a strategic advisory group designing structures for entrepreneurs, investors, and family offices who want to operate internationally and actually have complete control and compliance. And again, our clients have been CFD brokers, fintech founders, crypto traders, private wealth managers, simple business owners, and global consultants, and we essentially handle all the offshore formations, residency and citizenship by investments, banking and EMI onboarding, trust, foundations, and holding company actual design of how the tax flow actually works. So before you register in Delaware, please speak with a professional who designs global structures every single day. Again, you can book the call down below. And again, it's a difference between a $300 mistake and $1 million structure that actually lasts, that doesn't even cost $1 million. So I hope that helps. And if you haven't already liked, subscribed to the video, please go ahead and do so. And please leave your comments as well, especially if you already own a Delaware company. Let me know how it's going and your pros and cons of that Delaware company right here. Cheers, guys. Bye-bye.